Well, global markets staged something of a recovery last week, but over the past 48 hours, things have looked a little more uncertain. So hi there everyone, welcome to the Traders Circle Weekly Market Update. It's already the 2nd of December 2025, and before I start, you do need to be aware that whatever I say is general advice only. The big news is that we're probably going to get a Federal Reserve rate cut next week, on Wednesday the 10th of December. Markets have been a bit uncertain about this event, but as US economic data has deteriorated, the odds of the rate cut next week have increased. At the moment, they sit at about 85 to 90%, about double the chance of what they were about 3 weeks ago now. So with that rate cut expected, we've seen global markets rebound, at least until the last few sessions. It's been a pretty strong sort of fortnight for US shares, and even the Australian markets have sort of rebounded a bit. However, after that rate cut happens, the market's a bit less certain. So they're expecting a rate cut in December, but if that happens, it means we might not see that many rate cuts, if any rate cuts at all, in 2026 from the US Federal Reserve. Obviously that could change, and we are going to see a bit of a changeover in some of the Fed members next year as well, including Fed Chair Jerome Powell, who's obviously been quite a steady hand, and who's probably been a bit more hawkish than the US administration would like. With Powell out of the picture, Trump will be appointing a new Fed chair, and it's likely that he's going to appoint someone who's a lot more willing to cut interest rates, a lot more willing to toe Donald Trump's line. Now, that's obviously perhaps increases the likelihood of more rate cuts, but it's not a good thing for markets in general. For the Australian market, the Reserve Bank is unlikely to cut interest rates anytime soon. So we've got the Fed cut, we're probably going to see the RBA hold rates in December. Now the RBA has basically said that the next rate move is not guaranteed to be down entirely. We might see the next move from the RBA actually being a rate rise. Now, obviously, it's a bit uncertain to know what they're going to do next year. It's going to be data dependent, but given that the rate cuts look like they're drying up for Australia, it's no longer such a bullish driver for the Australian market. And I think one of the reasons we've underperformed the US markets for the past couple of months is that they are still expecting rate cuts in the US, whereas here in Australia, it looks like this could be the end of the cutting cycle. Now, I don't know for certain. Obviously, we could see data weaken for the economy in Australia next year, and that could mean that we're going to see more rate cuts. But for now, I would say we're pretty close, or we might already be at the bottom of the current RBA cutting cycle. One of the sort of interesting things that have potentially blown up a bit this week, over the last 48 hours at least, is the carry trade, where people borrowed Japanese yen and lend US dollars. And they've been doing that for a very long time. And it's pretty straightforward as to why they've done that. And that's because the interest rate on Japanese yen is very low. It was at 0% for a very long time. And the interest rate on US dollars is relatively high. It's been above 5%. Recently, it's come down towards 3%, but, still a lot higher than 0%. So a lot of people are borrowing a lot of money in Japanese yen, lending in US dollars. The issue is that interest rates on the Japanese yen have started to push higher. And indeed, the Bank of Japan is expected to lift rates later this month. So with that rate rise starting to look more likely in Japan later this month, we've seen a lot of unwinding of this carry trade. That's led to a big spike in the Japanese yen, a bit of a push lower in the US dollar, and it's basically triggered a bit of selling in US markets over the last 48 hours, bit of selling in other parts of the world as well, maybe even contributed to a bit of selling in the crypto space. Currently, the interest rate differential between the US and Japan is still very large. US rates are a lot higher than they are in Japan. But as those rates start to become closer and closer together, we are going to see more volatility related to an unwinding of that carry trade. Obviously, the differential is still going to be there, but you've got to keep in mind that people have leveraged into this trade. So, they don't need it to get back to, parity between Japanese and US rates. Even, a reduction in that disparity is going to cause a bit of volatility. And yeah, like I said, that's what we've seen over the past sort of 48 hours. Finally, I've sort of wanted to touch on one last hurrah, whether, we will see one last US interest rate cut later this month, or next week, I should say, and that is helping to push US markets, or it has helped to to push US markets back towards their all-time high. However, if they do get that rate cut, subsequent rate cuts are going to look less likely. And so we could see a bit of positivity around that event next week. But if the Fed basically says, they're not going to cut anytime soon after that, that could be the final push on this bull run. This bull run has been going since October 2023, and it's been driven by interest rate cuts and money printing. The money printing is going to continue, but the interest rate cuts might not, especially given that inflation is looking very sticky. So if the interest rate cuts dry up, could that lead to a bit of an ending for the monumental bull run that we've seen for the past 2 years? I'm not too sure. And like I said at the start, we could see a changeover in the Fed leadership next year, and they could be a lot more dovish than the current Fed leadership. What I will say, though, is that, if inflation does tick back up from here, even if they are extremely dovish, the new members of the Fed, the hand will be forced. They can't cut rates as inflation is rising. It's literally, they don't have the strength or the power to do that. I would say if they cut rates at the December meeting, subsequent rate cuts are going to look less likely, and I think markets will be in a bit more of a negative frame of mind after that meeting. If they don't cut in December, however, if they don't cut next week, while markets might be a little bit negative in the short term, I think that could be a bit more of a positive for things in the more medium term, because it's a greater likelihood that they'll cut in 2026 as a result. So we'll have a quick look at the charts for this week. And this is the US market, the S&P 500. As we can see, they've pushed up over the last sort of fortnight or so, and they've come back to the previous peak at roughly 68.50. This is a bit of a questionable level for them, because if they do fall off from here, they will have set a couple of lower peaks now, and that is a bearish indication for their market. If they can go beyond 68.50, that's where they're looking towards the all-time high. However, if they hold below 68.50, we could see a move towards 67.50, and then if that breaks, at least 65.50. So I'll be watching these levels in the coming sessions. If they break higher tonight, we're looking at an all-time high, perhaps even higher than the previous all-time high. If they don't break higher tonight, we could be in for a period of negativity. And like I said, it could be that this is the last hurrah of this bull market. If we have a look at the Australian market, we can see that we've been a lot more negative. We started falling in late October, and that coincided with our reporting from the August reporting season, but also the bank reporting season in early November. We've fallen because our earnings haven't risen with our share market. Our prices have gone up, but our earnings haven't. So that's why we've underperformed up until now. That in addition to the fact that our RBA obviously a lot more hawkish than the US Federal Reserve. Now we have bounced a bit across the past fortnight with the bounce in US markets, but we haven't been able to go beyond this downtrend line. We haven't been able to go beyond 86.50. We'd need to go above the downtrend line and above 86.50 for a recovery to look likely. Unless we can do that, it looks like we're holding this downtrend in the medium term, and that could indicate that we're going to take another stab at 8,400 as we did about 2 weeks ago. If we break below 8,400, that's where we're starting to look towards the technical correction level, roughly 82.50. That'd be 10% from our peak in October. So our market also at a bit of a decision point. I think we're also waiting to see if US markets take another run at the all-time high, or if they see a lower peak here. If they do see a lower peak, our market will continue the downtrend. But if US markets push back to the all-time high, that's where we're going to break the downtrend line and head back towards 87.50 on the XJO. So we'll wrap it up there for this week, guys. Hopefully you enjoyed. If you did, click like, click subscribe, and we'll see you next time.